This podcast is brought to you by Customplan Financial Advisors Inc., an independent insurance managing general agency in Canada. FINANCIALPODCAST.ca was developed with one goal in mind: to educate Canadians on important topics that affect their financial well-being and make it readily available to all. We welcome you to plug in and learn with us. If you have questions, please email us at contact@financialpodcast.ca.
Hello, everyone, and welcome to Financial Podcast. Today, we are honored to have Peter Wouters here from Empire Life, who has a wide variety of skills in education and is going to talk to us today about a lot of different and interesting things. So I'd like to turn this over to Peter and have Peter introduce himself to us.
Thank you very much, Darlene, and welcome to everyone who's listening in. I devote much of my time working with independent advisors and other professionals, uncovering issues and concerns that are faced by affluent individuals, professionals, and business owners. And what I do is support their efforts in researching and developing optimal solutions for them that's aimed really at improving their financial well-being and supporting both their personal wishes and business wishes as well as their lifestyles. Over the years, I've provided thousands of workshops, seminars, and technical support throughout North America on tax, retirement, and estate planning issues, concepts, and strategies. And as an accredited registered financial gerontologist, I educate people of all professions who work with or specialize in the needs, expectations, and issues of an aging population. And comprehensive lifestyle planning is a pretty important element of those processes. I've been honored to have been repeatedly interviewed on regional and national television, radio, newspapers, journals, as a subject matter expert on various industry issues and developments. I've been a pretty prolific writer on matters dealing with retirement, financial and lifestyle planning. My articles have been published in newspapers, industry bulletins, and trade journals throughout the world. And I used to write a newsletter that was recognized internationally for 5 consecutive years as one of the best of its kind in the insurance sector in the world. Darlene mentioned that I'm with Empire Life. I'm a longstanding director of tax, retirement, and estate planning services at Empire. This is my 30th year with the company. And among my many professional industry affiliations are the Conference of Advanced Life Underwriting, the Society of Trust and Estate Practitioners, the Institute of Research and Planning, the Canadian Tax Foundation, the American Institute of Financial Gerontology, and the American Society on Aging. And I have been, since the beginning, the faculty chair of the International Elder Planning Counselor Program. And besides all that, I still had time to go to school. So before entering the business, and then even after I got into the business, I graduated from McMaster University, Northeastern University, and Widener University. I've got over 4 decades of experience, and people do consider me, and I guess I consider myself, a pretty good student of the business because I've managed to rack up about 16 professional designations. Now, there's a mouthful, Darlene.
Yeah, wow. That is an impressive list of skill sets that you've got in your toolbox. That's excellent. We are so pleased that you were able to make time for us today.
My pleasure.
So, Peter, you've been in the financial services industry for over 30 years. When it comes to insurance, what are some of the biggest changes that you've seen?
When I got into the business, I was trained to provide financial planning and needs analysis in a typical 2-interview system. And there was a lot of training back then. And this was when you could still go out and drum up business by accessing lists of newlyweds, newborns, mortgage holders, and small businesses. You then qualify those leads. And back then, you call people in businesses, at least I did, on a rotary dial phone, or you actually knocked on their door. Cold calling is something from a bygone area in Canada. And there are now some pretty strict rules about who an advisor can approach and under what circumstances. Privacy back then was a best practice. Now it's heavily regulated. You simply cannot build a book of business today the same way you could 30 or 40 years ago. And when I look at the way people approach the business and where they focused, insurance and investments were fairly distinct disciplines when I got into the business. Typically, you wouldn't do both. Group insurance or employee benefits was another specialty field like pensions. And it's arguably become even more specialized today. We have specialists today that can work with you to do most of the work. And today, compared to yesteryear, most financial advisors offer insurance and investment solutions, and financial planning is being measured, it's being audited, and it's being regulated. So a very, very different world. I reflect back on my career and how it's developed over the years, and I recognize that years ago, people growing up went through similar patterns. They went to school, they left home, they got married, they were having kids, they bought a home, maybe they moved to a bigger home. They started saving some money, they participated in a company pension plan, and then they retired after paying off the mortgage and watching their children have children of their own. They became empty nesters and relaxed. Well, the world today is a very, very different place. Kids don't leave home as young adults, and when they do, some come back. And I'll talk about that a little bit later. The other thing I've noticed, go ahead.
No, I was just going to say, wow, that is some fairly significant changes that have occurred.
It had, and it impacts the way you approach people and the things you talk about and what's actually preying on their minds. If I look at some of the biggest challenges and changes that have occurred, it's really the use of technology to automate a lot of routine processes and move away from what has historically been a very, very paper-intensive business. Empire Life, as an example, launched a portable quoting system almost 8 years ago that I was an integral part of, and advisors could use their smartphones to do quick quotes. That's something you couldn't do. Back when I got in the business, you had a rate manual, you walk around it, a big, thick manual, and you look it over page by page and pull out a calculator, and that's how you did your quotes. Now, after we launched that portable quoting system 8 years ago that you could use on smartphones, we launched the first comprehensive digital new business system called Fast and Full. And it began with life insurance 6 years ago and investments 3 years later. So that's well before the pandemic accelerated the process for the entire industry earlier this year. And it included back then non-face-to-face meetings using shared screens and video conferencing, all built into the package. So going virtual and taking a hybrid approach, so that's using technology and that human interaction to develop and run a business and interacting with clients and automating processes, has really been forced on a lot of advisors who were taking a wait-and-see approach and who are quite comfortable doing the business much the way they had done for decades. But that's all changed now, Darlene. All of that's changed. Distance or scheduling is no longer a restriction. In fact, distance is limited by where you're licensed to do business. So I can deal with you remotely from Halifax, and you could be sitting up in Tuktoyaktuk. We could do business as long as I'm licensed in Tuktoyaktuk, up in the Northwest Territories or Inuvik or wherever. You and your clients can experience reduced traveling times and costs, which is great. Both parties experience an efficient meeting and purchasing process, one that's much more cost-effective and time-effective, especially for smaller insurance and investment policies where advisors say, I don't know if I can invest that kind of time and energy to drive across town or drive 100 kilometers out of town to go see somebody. Well, now you don't have to do that, nor do they have to set aside hours to come and see you. I then go back and think, well, when I got in the business, in fact, I'd been in the business a long time before the internet came into play and before it was established. People today suffer from data overload, and they got a tougher time finding relevant knowledge that is applicable to them in their particular circumstances and their goals for the future. And here's where advisors today can play a very, very important part. Accredited advisors who subscribe to a code of ethics, who stay current and expand their knowledge base, even in a particular area, can help here. And a message I've got to listeners is that if you plan on being in this business for a while and you need to get continuing education credits anyway, it's mandatory, why not get credentialed as part of the process? Kill two birds with one stone. Here's something else, Darlene, you may not know. Did you know that there are now applications to find and grade a trusted, competent advisor specific to the client's scenario, as well as their needs and expectations for doing business and interaction going forward? There's an app for that.
Wow, I had no idea. Wow.
Yes, there is. Yep.
That's impressive.
So there's an app out there, but are people using it? So a 2018 joint study called the Life Insurance Barometer looked at consumer selection of advisors. So now consumers are looking at advisors and deciding to choose them. And it found out that a strong social media presence is now a key success factor for life insurance advisors. Big, right?
Yeah, I believe that. I think that's probably important in a lot of different industries.
Yep. And we haven't been left out of that. In fact, when you drill down a little bit on that survey, you'll find out that 44% of Gen Xers, over half of millennials, over 54% are likely to check a recommended advisor's social media presence. So they're working on a referral, and they're going to check you out on your social media presence to see, do you have one, and is it current? Before they decide to do business with you, and if they don't like what they see and read, they're not likely to have an interview with you, not likely to meet with you, and not likely to do business with you. So a question that I've got is, what about your online presence? What you do, what you offer, what you don't offer in terms of services and products, who you offer them to, how you do what you do, why you do those things, and what's your uniqueness. I mean, there are thousands of advisors around there, hundreds of advisors in and around Calgary. How do you pick one from the other? How do you stand out? And so getting your uniqueness across to people is a tough thing to do. But if you can do it properly by leveraging the technology and by becoming referable, then you've got a leg up on the competition. And that's quite a change from even 5 years ago, let alone 40 years ago when I got in the business.
That is a change, and we'll talk a little bit more about technology and new advisors in a little bit. But I wanted to backtrack a little bit and ask you if there are some product enhancements that you can share for advisors focusing on family and the small business markets. For example, I saw that Empire Life recently released a Disability Credit Protect product. So I was wondering if you could talk about that a little bit.
Okay, thank you, Darlene. Well, we've been packaging life insurance and critical illness for a number of years right now, where you could buy one and then pick up the other as a package, and both pay out a lump sum on a covered claim. But let's consider this new product we've come out with, Empire Life's Disability Credit Protect. We've seen great sales potential in the mortgage insurance market with the life and disability rider combo. The banks have been doing this for an awfully long time. The market is big. The mortgage insurance market has $1.6 billion in annual sales. And adding disability insurance to that, Darlene, allows us to tap into the market and compete head-on with the banks. So we've been hearing a lot from advisors that disability insurance is a missing gap in our product line. What they're looking for really is a simple solution for the family and small business market. So they don't want it complicated. They want something simple to cover debts, to cover payments. So awareness of the need for more life insurance, for more critical illness insurance, and even disability insurance has been heightened by the experiences that we've all had going through this COVID-19 pandemic. And interest in these types of coverages have gone up significantly this past year, as noted by studies including 10 ways COVID-19 is affecting the life and annuity distribution world that was published in March of this year. There was the World Insurance Report that came out in May of this year, and Capgemini's COVID-19 consumer survey that was also completed in May. And they found that interest had risen by almost 30%. So clearly there's a demand by consumers saying, we need this and we want that.
I wonder how much of that has changed since May and March, like when those...
Yeah, it hasn't gone down. I can assure you it's gone up, right?
Oh, yeah, I would well imagine.
Yeah. And then, people from an advisor's perspective, talking to consumers about whether or not, is there a likelihood of this thing happening? The average age of a claimant isn't 65, it's 47. That's the average age of a claimant. So they're into this house. It's a big mortgage. Maybe they're married or they're living with somebody. They've got a couple of kids. And then, man, this hits. And that came out of a study from the Fraser Group on claims data bank terminations that they conducted back in 2017. So age 47, the average age of a claimant. And so when we looked at all of that as a company, our target market really are families who own homes, have a mortgage or other debt, and they're looking for an insurance package to cover those obligations, or they're small business owners who need to service a loan or a line of credit. And one nice thing with our offering is that if they change lenders, they don't have to reapply for coverage like they would with a bank. It's portable. They can just pick it up and take it with them. Now, here's something that we found out that actually came out back in 2012 and is as current today as it was then. And it came out of a Life Insurance Marketing Research Association study that when they were looking at trends, found out that disability insurance sales are an increasing trend and have continued to increase from 2012 until today. And within disability insurance sales, non-cancelable products were gaining traction. So what does that mean to an advisor, and what does that mean to a customer? It means that once you get the policy, the company can't cancel it, even if you become a bad risk, even if you start getting all these ailments. It also means they can't change the rates, so which is nice, right? So you get it. If your health changes or anything else happens or the experience goes bad, it's all on us. We're taking the risk, and you're guaranteed to have this policy stay in force as long as you keep paying the premiums. The rate's not going to go up, so that which is nice.
Wow. So then what is covered in this Disability Credit Protect?
Okay, so eligible debts and payments would include personal or student loans or mortgages, a vehicle lease, rent for residential properties, a line of credit or a commercial loan, but not a credit card balance, or not loans that are contracted, right after you get a disability. These things these are obligations you had, regular loans you had before you actually applied for this policy. And the coverage you get would range anywhere from $300 a month up to $3,500 a month. And because it's a rider on a life insurance policy, it caps out at about $100,000 of life insurance coverage. So if you got $100,000 of life insurance coverage or more, you can pick up as a rider about $3,500 a month of loan payments that can last either 12 months or 24 months in terms of benefits. So that's how long the benefit period would last. And again, what we found out is that what people really want, whether it's during the pandemic or whatever, most of them are not looking for a permanent handout. They just want to get by. They want to get through this bad time in their lives. And they figure, get me through the next 12 months, get me through the next 24 months, and hopefully either things will get better, or at least I've got breathing room and time to actually make better long-term decisions. So that's how we package that particular product.
Yeah, well, and it's so timely too. Like right now, there's probably a lot of people that would appeal to.
Yep.
So in our conversation earlier today, we spoke briefly about some changes in our world, and one of them being telemedicine. What is your company doing with regards to telemedicine, and what can you tell us about telemedicine?
Well, what we found out from the Canadian Medical Association is that there's a growing trend in telemedicine. And what that means is that if you look at this past year with COVID-19, almost half of Canadians have accessed some sort of virtual care during the pandemic. Not face-to-face, it was screen-to-screen or on a telephone. And so people they're reaching out for help, and they're saying, I can't find a doctor, what do I do? So what Empire Life did is they responded to another 2020 survey on requests for coverage, and was one of the first companies to launch something we call Teledoc, so telephone a doctor. And what that does is that plan members for all group plans can connect with a doctor in minutes, any time of the day or night, 365 days of the year, or they can set up a specific appointment time, which is great, right? Absolutely fantastic. And coupled with that was a response to a change in consumer trend in light of COVID-19 and physical distancing. And that is that every plan member on the group insurance division is getting Mental Health Navigator as an inclusive benefit. So we've talked about the mental stresses people are going through, the anxiety, the depression. This is a real differentiator responding to mental health issues and the need for support as people feel isolated, overwhelmed, and stressed out. And the market is changing, and we're trying to remain relevant and current with all of those changes.
Yeah, and I think the Mental Health Navigator, that's a big plus, because I think it's really underreported, the number of people that are struggling during this time right now.
Yes, yeah.
What adjustments do you think should new and mature advisors be making in their interactions with clients now?
A question I asked at a conference yesterday, I was a closing speaker for a major conference, and a question I asked at another conference last week is that if relationships matter, and we know that they do, then conversations matter as well. So advisors need to move and adjust to the client experience business, particularly if they want to show how they are different and bring special value to the customer. The quickly dominating trend is that your clients' best experiences become their new expectations, and those expectations may not even be in the financial services business. So a key reason for that is that clients' expectations are blurring between services, and they said, I can get this at Apple Store, that's what I want at the bank, and that's what I want when I'm dealing with a financial services company. I want the same thing. So a call to action really is for advisors is to build a broader foundation of support, and certainly companies like Empire Life are here to help you along the way holistically to deal with the individual on a much more comprehensive basis. And we're certainly here to partner with you to offer a much more holistic digital approach to client engagement, complemented by that human touch, to give you that true hybrid approach that clients, whether they are over 50 or whether they're millennials, really are craving for.
Oh, wow. That's great advice. And I think it's probably, quite timely, because I'm sure there's lots of advisors out there that are trying to pivot their own business model. And so these are great options for them.
Yes.
You have a strong connection to providing services to the older population. So how did that start, and how can those in the insurance industry provide value to that group?
Well, as a boomer, I've experienced the impact that our cohort has had in North America in particular. We've changed the world in many ways, in good ways, but in some bad ways as well. And we're living longer too. We're all living now into our mid-80s. And my interactions with thousands of aging people, plus the research and studies that I've completed, have shown that people value comprehensive planning. And as I've frequently said in webinars and seminars to advisors and other professionals, you can't put together a proper insurance or an investment plan if you don't know your client's story. And what's more, that story is impacted by so many things, so many life events, health, economics, experiences, knowledge of finances, values and dreams of the future for those clients, for their families, and of course for the communities in which they live. And when we talk about retirement, we've got that stereotypical view that's like our parents and grandparents back in the 1950s, 60s, and 70s. Well, boomers changed all of that. And Generation X, their younger siblings, are following along with very, very similar paths. So one area where advisors can add value came out of the SIFMA Cerulli Individual Investor Project, which was released in June of 2020, which found that investors who have between $100,000 and $1 million in total financial assets rely more heavily on the advice of their financial advisor compared to their wealthier peers. And a growing number have rising expectations. And if those expectations are not met, they're going to take their money and move elsewhere. That's what they're going to do.
Right. So why is your focus on retirement income planning, and why should listeners be interested in this?
Well, what tops the list, Darlene, of all kinds of requests and needs for clients is planning for retirement. It's the most important goal for individual investors, followed by protecting their wealth. And that's according to survey results from the Phoenix Marketing International and Cerulli Associates back in 2018. And here's one more reason for my focus on retirement income planning and where advisors can add real value. I've been speaking about the growing importance of holistic planning, especially when dealing with an aging population, for a number of years. When I was approached to be a founding member and faculty chair of the International Initiative for Elder Planning Studies. And then a couple of years later, I earned my registered financial gerontologist designation from Widener University. Around the same time, my daughter, by the way, was getting her degree in gerontology. And then later, I picked up some other relevant specializations in aging population. And what I found out, and I took on the role as faculty chair, is that the goal of the Canadian Initiative for Elder Planning Studies, which started back in 2002, was back then and is today to provide a comprehensive and inclusive program to people of all disciplines that are dealing with an aging population. And it offers an accredited and ethics-bound program that goes beyond the numbers, traditional approaches and strategies, breaking taboos and conventions, and really applying a holistic knowledge as a fundamental offering. And that begins an ongoing process of continuing education, both for the client as well as for the advisor. And that approach has been supported by a number of studies over the years, including a joint IROC and Accenture study that was done in 2019 that was called Enabling the Evolution of Advice in Canada. And the Elder Planning Counselor Program was the first and still remains the most comprehensive, up-to-date educational program available in the marketplace today. So why this focus aside from that, Darlene? Well, more and more Canadians are seeking holistic advice. They're looking for goals-based advice that documents and supports what they want to do in life and that supports their overall financial objectives. And it's not necessarily age-specific. Millennials have a lot in common with aging boomers when it comes to interests and expectations. So remarkably, when you get attuned to how you want to interact with boomers, it works with millennials. And in fact, those millennials, you recall, are the boomers' kids. And they're recognizing right now is that, you know what, sooner rather than later, I'm going to have to step in and take care of mom or dad and take care of their finances. I need to figure out what's going on here. So and because of that, there's a broad recognition that aging Canadians don't want to take a compartmentalized look and feel to their finances, their documents, and products. And what's more, they value an approach that considers an entire family and other interests. And you think about that, that really bridges generations for advisors. I can deal with the kids. They can introduce me to the parents. I can talk to the parents. They can introduce me to kids. They can really add some glue around that overall relationship, which is what both parties are looking for. And they value, whether you're talking to aging Canadians or millennials, they value looking at the complete and overall picture and helping to put the puzzle pieces into place with the help of experienced, accredited professional advisors. They're looking for transparency, they're looking for consistency, and they're looking also for the control of processes. And they're really sensitive to the feeling that they don't want to be a burden to their families. So recognizing that with people living longer and the incidence of losing capacity is also increasing, aging individuals and their adult children see real value in documenting plans, having tested solutions in place, and working with an advisor that gets it, that understands that.
Yeah, and that's key in so many different areas too. Like it especially in insurance. I mean, if you're taking this important information, then the more you know, the better you can serve, right?
Yes. Yeah. Yeah.
We touched on technology before, but to somebody starting out in the insurance industry, what advice would you give to them?
Look to the drivers of change in the financial services industry. And when you look to the drivers of change, you think it's technology, but it's not. Change your focus of your approach to what I said earlier was the client experience business and recognize the impact of digital capabilities that help you do that job more efficiently and improves that experience on the customer side. I mean, technology is a disruptor, it's a distractor, it could also be an enabler as well because it can drive other needs and expectations for customers and people and organizations. So people's needs, their expectations, and social behaviors are those main drivers of change. So you need to spend as much time as possible understanding what those things are and recognizing as well as that life events, not demographics, are more important determinants of needs and interests and savings, emergency funds, insurance, and planning. So let me go back to something I said at the outset. You talked about some changes that I've seen. You know, for example, people today, they have children, then they may or may not get married. They split up. They could have children again. They settle down with someone else or not. They don't leave home at a certain age or upon reaching a certain income level. They don't retire at a certain age. They don't buy a house at a certain age. Children on average are happening later in life, as are marriages. More and more people plan on working past traditional milestone ages, and none of this is age-related. Life events shape the decisions and needs. So people's needs and expectations drive change much more than anything else. And technology feeds that and accelerates that range of change. So that's something you got to be thinking of. So as an advisor, you really got to think differently right now when you're looking at this business. And then to support that, there was a September 2020 article on Canadians prizing financial advice even more amid the pandemic, coupled with a couple of other studies, including some environics research that was completed this year as well, that found that the majority of Canadians said obtaining advice from their advisor was more important than ever. So 62% of those that have a financial plan intend to update it or revisit it due to COVID-19.
Isn't that fascinating?
Yes.
Yeah.
And 3/4 of investors believe they need financial advice to be successful in the future. So there's right. Are you offering financial advice? Can you even hold yourself out that way because of the changing regulations? So that brings me back to getting credentials. There's a huge gap there in terms of financial literacy. We're at the tail end of Financial Literacy Month right now. Only about 1 out of 4 feel they understand even the very basics about finances. And more than 9 out of 10 survey respondents feel it's important to work with an advisor who is familiar with their personal circumstances. So what are they looking for? They're looking for personalized, targeted advice that fits into their comprehensive outlook and their overall plan based on their life events. So again, a hybrid approach that optimizes technology and a human touch is really attractive to them people. And recognize as well, as I said earlier, that their expectations are getting higher as well.
Right. Well, that's it's so important just getting to know your client, right? Just getting to know people.
Yeah.
How is Empire Life? Like, what is Empire Life doing to help advisors in this way?
Quite a few things, I think. Consider, for instance, Empire Life's fast and full insurance and investment application process, where we have e-signatures, e-payments, instant approval, because we have automatic underwriting available to applicable eligibility requirements. It's available on a face-to-face basis or a non-face-to-face basis. We have e-contract delivery. We can have same-day trades for investments before 4 p.m., and we can have electronic transfers for registered funds. We have integrated screen sharing capabilities, so you don't have to learn how to use, it's Skype this way, and it's Google Meets, and it's, I don't know what the system is we're using right now. This is all integrated right now. And what's more, this is an award-winning, industry-leading enabler for advisors and clients, which are really serving to transform the digital market for life and insurance investments. And we demonstrated, I think, our commitment to constantly improving and innovating because we've made over 3,500 enhancements since launching this. And we launched this for insurance back in 2014. We did it for investments in 2017. We've got website and live support training that made us to be very well positioned for COVID-19 and carry on for an extended period of time, right?
That was certainly timely and well thought
Yes, it
out.
was.
That's for sure.
Yeah. And again, consumers are looking at advisors differently, including what credentials they have, what standards, including ethics, they're obligated to behold. And we can help with all that process about education and professional designation and recognize as well, and this happened last month in October 2020, FP Canada, which is the financial planning organization, struck a technology working group to consider standards relating to the use of technology that's being used by either people who already hold the CFP designation, Certified Financial Planner designation, or a qualified associate financial planning certificates. So it's all coming together. So again, to newer advisors and those who want to recharge their practices, you're going to have to embrace compliance and you're going to need to embrace education.
Well, education is important. And as you talked about in your introduction, you have a well-rounded education with a boatload of accreditations behind you. Do you find that in your interactions with your clients, you're drawing from all of these different areas?
Not all anymore. I mean, my focus and responsibilities have changed and evolved over the years. I felt at each stage of my career that I needed technical competence that was tested, formalized, and credentialed in a particular area in order to optimize my efforts and results. I was involved in a number of research and task force groups as part of the senior management team in our head office, and it really gave me recognition among coworkers, vendors, and other professionals that I had the educational background to interact, to contribute, and make decisions. And then I would move on in part because I was versatile. But I do lean on a number of credentials and the resources and knowledge that they've given me in my work today. I think it gives me a broader, more interconnected view and approach to working with advisors and their clients. It supports that holistic or comprehensive approach to dealing with clients. And I recognized a long time ago that education is like milk. Mm-hmm. There's an expiry date on the carton. So you need to keep learning just to keep up. And you do. And you need to go that extra step consistently to get ahead. So learning just to keep up, but go that extra step to get ahead. And if you're getting ahead, then you're standing out. If you're just keeping up, you're not differentiating yourself. So it's part of the process you follow to help build trust in what you say and, of course, in what you offer.
Right. Learning never ends, really.
No, it doesn't. No.
You've indicated on your profile that you include comprehensive lifestyle planning and retirement income planning as part of your process. Can you expand on that for us? Well,
we're on the verge of a paradigm shift in the financial services industry and the advice industry. Maybe we're living it right now, and it's certainly going to redefine what professional, trusted financial advisors do, how they market their value, and what clients will come to expect in the future. Now, that shift has been accelerated because of volatile and shaky investment markets. It's been accelerated because of the coronavirus pandemic, but it's really the aging consumer who needs different advice that is the primary catalyst for that shift. At least for now, that's where the money is. And the quickly emerging opportunity, of course, lies with engaging millennials who want a similar style of advice coupled with digital options. And we're saying, you know what, we're going to be inheriting anywhere up to about $750 billion sometime in the next 10 years. I mean, that's the forecast of the intergenerational wealth transfer, according to Stats Canada. And for the past decade, we've seen a move on the part of our industry to tie financial advice to life stages and transitions and away from straight investment management or simply selling insurance. And it's a trend you're going to see not only with boomers and Gen Xers, you're going to see that with millennials as well. And I've always called that the life planning approach because it respected the idea that financial planning is the method by which clients facilitate life planning. Because if you're talking to clients, if I'm talking to you, Darlene, you don't have financial dreams or financial goals or shoot for financial success unless you're talking to me, because that's the way that I talk. But that's not the way you talk. You've got all kinds of other things that are important to you. And what I need to do is work with you and then bring in some of these ideas and maybe put a number to them if a number is actually needed.
Yeah, it's something that's so important to have a good idea of what you want in life, right? So in talking and writing about our aging population, I've heard you talk about the R word and what that means. Can you share some of your thinking on that?
Yes, Darlene. I've had sessions on boomers and the R word that I share with advisor groups. I share that with client groups right across North America. And I share the many conversations that I've had in the studies that I've undertaken about aging and financial gerontology. And these conversations aren't just about money. They can't be just about money if you're going to provide what clients want and value, and that's holistic planning. So it's about what money can do for them to help them achieve and experience what's really important to their clients. And in fact, where money is not as important, it's about making the connections. So lifestyle objectives are dynamic, they're contracting, they're expanding and evolving from what were the central considerations at the outset. And boomers and aging Gen Xers are and will continue to change the definition and understanding of the R word. When I think of the R word, you're thinking about somebody that's over the age of 60, you think of retirement. But in my sessions with aging Canadians and in client seminars and advisory groups, I ask them what the R word means. And for most of them, it doesn't mean retirement, at least the traditional lifestyle of their parents. So they're consistently saying that they're busier now than they ever were. Well, if you're consistently busier, then how can you be retired? Right? You can't be. So here are the terms that I hear. When I hear the R word, here are the words that I hear. Rehirement, reinvention,
right?
Recreation, reimagine, relaxation, repayment, reinvestment, reentering, rejuvenation, renewal, reinvigoration. Maybe it's rewiring or repurposing, review, and of course, relevance. And that last word, relevance, is something that strikes hard and deep with many people as they get older. It's the word that keeps business owners from retiring. It keeps advisors from doing it or even planning for it. It puts off decisions about succession planning because people are not thinking about or have not redefined who they are going to be next. So as a rule as advisors, we need to find out what our client's definition of the R word is and what it's going to mean in their lives. And it may be one of the words I mentioned in my list. It may be a combination, and recognize that R word is going to change as people move through the various phases of life after age 55.
That's so true. Like I like your R word options. Because I think there's so much opportunity out there for an aging population.
Yeah.
Expanding on the options for providing services to the elderly, can you provide some statistics such as what percentage of the population is over 60, 70, 80, and where are they being underserved right now?
Well, one thing, Darlene, you can count on me when I'm speaking to a group is that I do my homework. So
I believe you.
Yeah. So as we've aged, I think we found ourselves as part of a sandwich generation, caring for children and parents at the same time. 9 years ago, 2011, the leading edge of the boomers started turning 65. 11 years ago. By 2016, there were more people in a country like Canada over the age of 65 than there were children under the age of 15. And that's not going to change for a long, long time. And these came out of StatsCan surveys and results. We refer to that as the silver tsunami, and here's why. We've got between 1,000 and 1,500 people turning 65 in this country every single day. And if I look back at the boomers in North America over the last 5 to 10 years, someone has been turning 50 every 7 seconds.
Wow.
Yes. That silver tsunami, right? It's wow, it's happening slowly and all of a sudden. The leading edge of the baby boomers, by the way, the leading edge will begin turning 75 in a couple of months in 2021. And then the fastest growing segment of the population are those reaching age 85 and over. And a lot of that's covered under Situation Critical, the Elder Planning Council Program 10th edition. So you look at that Stats Canada results and the results from the Elder Planning Council Program, and you also learn that the numbers of people that are covered by defined benefit pension plans, where the amount that retirees will get is set for life, continues to drop. It's only 1 out of 4 as of January 1st, 2018, according to Stats Canada. And over 50% of those people work in the public sector. So if you're working in the private sector, there's even a lower probability that you've got a defined benefit pension plan. And that means more and more people will have to set up personalized pensions, including guaranteed lifetime income, again, something that I frequently talk and write about. So I've talked about the importance of focusing life events, Darlene, and the Financial Life Stages of Older Canadians report found that 6 out of 10 Canadians who were over the age of 50 experienced a major life event that challenged their financial plans. So again, those two are tied together. And that demographic as well may be targeted for investments, but they're largely underserved in those areas where they feel they have the greatest needs and desires. Only 20% have a detailed documented plan that lays out income and expenses that will address the various phases of what we collectively call retirement. There's little planning done in terms of estate planning and tax planning. 3 out of 4 Canadians have no financial plan to fund long-term care, according to a May 2018 Globe and Mail article on should you even buy long-term care insurance. And more than 4 out of 5 Canadians rely on advisors for some financial advice and support. And most want help from an advisor who provides meaningful advice from their client's perspective. Now, here's the big miss, Darlene. 3 out of 4 clients, consumers in Canada, say that advisors don't talk to them about any issues aside from the money. And that's according to a number of reports, including the 2018 IFIC, which is the investment organization, and Polara Mutual Fund investor survey that was done, again, 2 years ago. And I often talk about that in seminars, workshops, and educational sessions held by the Canadian Initiative for Elder Planning Studies. I mean, getting old is complicated. And not just for the aging, getting old is complicated for their children as well, because there are just so many different aspects to consider. And in order to satisfy their expectations to be dealt with comprehensively, professionals need to go beyond their traditional field of service. And aging individuals have a complete set of interrelated issues, concerns, and values that really need to be understood and appreciated as a package if their problems and goals are going to be addressed appropriately and completely. So let me take a breath here for a second and go back to that earlier finding I had about more than 4 out of 5 Canadians relying on advisors for some type of financial advice and getting help. And again, I said that 74% say that advisors don't talk to them about any issue from the money. Here's the zinger. Dr. Richard Johnson is a nationally recognized spokesperson in the field of retirement and adult planning. He's done a lot of work in the retirement field. He has 20 years of research, and he's found out that there are 15 key factors that will determine how successful investors or clients will be during retirement. So 15 key factors. And here's the eye-opener. 1 is financial.
Interesting.
Yeah. So the other 14 factors are influenced by your client's views on their health, their current level of happiness, their position in the workplace, their expectations of the future, including lifestyle. So let's compare that research with traditional approaches to retirement planning and retirement income planning, which focuses on one factor only, money. So retirement, relevance, holistic planning, and engagement helps to put that into perspective. So hopefully I've given listeners lots to think about and have them clamoring for more. So because we've got lots of resources available that we can share.
Well, you've given some great advice, and I really like the idea of taking a holistic approach to financial planning, because I think as the world has changed, like you've said, in the last 40 years, then that's an important factor, something to really consider. And And you've got such a wealth of experience and knowledge and education. It's been great talking to you today, Peter. I can't tell you.
Thank you very much.
I can't tell you how much I've enjoyed this conversation. I've learned so much about it. But can you let our listeners know how they can get in touch with you if they would like to?
If they'd like to get in touch with me, there's several ways of doing that. You can reach me at peter.wouters. My spelling of my last name is Wouters. So peter.wouters at empire.ca. I've got a toll-free number, 1-888-548-4729, extension 4209. The best way of connecting with me really is to go through one of our wholesalers who can do some vetting, because sometimes they can answer a lot of the questions that you may think that need to go to me. But I would encourage you to connect with me on LinkedIn if you haven't done that, because on LinkedIn I've got hundreds of useful articles, all written in very, very plain language for use by advisors and clients, especially people that are not as familiar with the financial services business. And the articles often include links to other resources that I've developed. I'd also ask you to reach out to Empire Life's wholesaling team for more information about our products and services, or just go www.empire.ca. And in that, if you're an advisor, we've got a whole section that devoted to business building ideas, concepts, newsletters, tools, and calculators. And if you want to know more information about the Canadian Initiative for Elder Planning Studies, you can find that out by, again, it's www, but it's CIEPS. So CIEP as in Peter S, so CIEPS.com, and you get lots of information about dealing holistically with an aging population.
That's excellent. And for our listeners, we'll have a lot of Peter's contact information on the website for you to be able to access. Well, thank you once again, Peter. And I hope you, our listeners, I hope you have enjoyed this conversation that we've had today. If you really enjoyed it, or if you have feedback, thoughts, please contact me at contact@financialpodcast.ca. If you have suggestions about guests, or if you would like to be a guest, please contact me. We're open to a wide variety of subject matter, and we look forward to hearing from you about this. Thank you, and I hope everyone has a great day. Bye-bye.
The views expressed here are those of the participants and not those of Customplan Financial Advisors Inc., its affiliates, or subsidiaries. This is not intended to serve as a complete analysis of every material fact regarding any company, industry, or security. This presentation may contain forward-looking statements. Investors are cautioned not to place undue reliance on such statements, as actual results could vary. This site and podcasts are for general information purposes only and does not constitute investment advice and is not intended as an endorsement of any specific investment product or service. Individual investors should consult with an investment professional about their personal situation. Past performance is not indicative of future results. If you are unsure about what is the best course of action for you in your financial planning, then we suggest you consult a fee-based independent financial advisor, or get in touch with us to discuss your individual situation. Our phone number is 604-687-7773.